Hey traders, going into the week of 5th of January, 2026. Last week, the VIX moved from 13.61 to 14.52, indicating a modest pickup in volatility enough to keep us alert, but not enough to change the broader market regime. The U.S. 10-year yield sits at 4.195% versus 4.132% last week. TLT is sitting on the 30-week SMA and exhibiting a positive slope. Using Weinstein's framework, bonds remain in a stage 2 environment, though currently in a consolidation phase following an extended move. As long as TLT holds above the rising 30-week SMA, the intermediate trend in bonds remains constructive. Option sentiment data shows that total put-to-call ratio reduced to 0.83 from 0.85 last week, while the equity put-to-call ratio tapered to 0.56 from 0.64. This shows investors are becoming modestly more risk-acceptant, though sentiment remains balanced. The percentage of stocks in the S&P 500 above their 50-day moving average is at 57% versus 62%, signaling softer short-term breadth. At the same time, the percentage of stocks in the S&P 500 above their 200-day moving average is 59% versus 60%, implying that the longer-term trend structure remains largely intact despite the cooling in short-term participation. Additionally, over half of the index constituents are in stage 2 advancing phases, reinforcing that leadership is expanding beyond a small group of stocks. Key takeaway: this week favors long exposure in hot stocks within hot sectors, with expanding leadership and control volatility supporting selective, trend-aligned trades. This is data vesting, trading with science, not emotions.